In this video, I'm going to give you a summary of one of the largest frauds in history, the collapse of the German company Wirecard. A lot of people have been asking me to cover this story, and I have waited because more and more information kept coming out. Wirecard collapsed in 2020, and so now we are 2 years later, and we have a much better idea what happened. But you should be aware, this is still an ongoing story. A few months ago, the former CEO, Marcus Braun, was formally charged with fraud and will be going to trial this fall. He claims that he is innocent, and people deserve to have their day in court. But now is a good time to look back and review what happened at Wirecard. In 2016, a short seller, Zatarra Research, released a 100-page report containing evidence of fraud at Wirecard. It specifically calls out high-ranking executives and members of the board for fraudulent activity and reports the stock to be worth $0. Short sellers are firms that bet that a company's stock will go down. They have an incentive to smear companies so that they can make money. You would typically read a report from a short seller with some skepticism. 3 years later, on January 30th, 2019, the Financial Times published an article alleging fraud at Wirecard. The article claimed they received direct evidence from a whistleblower inside the company. It also provided specific details on how the fraud was taking place, with foreign bank accounts in Asia. Specifically, they received a presentation that was given to top executives at Wirecard, including the CEO, Marcus Braun. The presentation explained how they were breaking the law and discussed topics like falsification of accounts and money laundering. The whistleblower who came forward was Pav Gill, the internal lawyer for Wirecard's Asia-Pacific region. He had uncovered the evidence of fraud and brought it to management's attention. Rather than correct the fraud, Wirecard executives forced Pav Gill to resign and then continued to threaten and harass him after he had left the company in order to keep him silent. That is when Pav Gill brought his evidence to the Financial Times. After the Financial Times article, Wirecard's stock started to drop. In a shocking decision, on February 19, 2019, the German financial regulator BaFin banned all short selling of Wirecard stock, only 1 month after the Financial Times article was published. People could only invest in the stock to make the share price go up, not down. 1 month later, on March 28, 2019, Wirecard announced that they are suing the Financial Times for defamation. 1 month later, on April 14, 2019, BaFin filed a criminal complaint against 2 Financial Times journalists and 10 short sellers, accusing them of market manipulation. 10 days later, on April 24, 2019, Wirecard's auditing firm, Ernst Young, signed off on Wirecard's 2018 financial statements, indicating there were no issues with Wirecard's reported financials. At that point, Wirecard said there was no problem. Their external auditors said there was no problem. And the German government said there was no problem. So much so that they were trying to throw the reporters at the Financial Times in prison. So for the most part, the general public accepted that there was nothing wrong. But there were still concerns, and so Wirecard hired an independent audit firm, KPMG, to review the Financial Times allegations. 1 year later, on April 28, 2020, KPMG produced their report. The report said, KPMG can neither make a statement that the revenues exist and are correct in terms of their amount, nor make a statement that the revenues do not exist and are incorrect in terms of their amount. In other words, KPMG confirmed that the Financial Times was right all along. 2 months later, on June 18, 2020, Wirecard's auditors, Ernst Young, refused to sign off on the financial statements. The next day, on June 19, 2020, the CEO, Marcus Braun, quit. 3 days later, on June 22, 2020, Wirecard announces 1.9 billion euros of revenues it had previously reported never existed. 3 days later, on June 25, 2020, Wirecard filed for the German version of bankruptcy, owing almost $4 billion to creditors. It has been 2 years since the company collapsed. During that time, people have been investigating, trying to figure out what went wrong. The former Wirecard COO, Jan Marsalek, has gone missing. Authorities suspect that he is hiding out somewhere in Russia. A German business partner in the Philippines named Christopher Bauer was responsible for the majority of Wirecard's revenues through the payment company PayEasy Solutions. Christopher Bauer was reported dead. Initially, the government in the Philippines would not confirm Christopher's cause of death. There was no body to examine, as he was quickly cremated. It has since been reported that the hospital confirmed that he died due to natural causes. Christopher Bauer was only 45 years old. On January 29, 2021, Felix Hufel, president of BaFin, resigns, along with the second-in-command, Elizabeth Rogel. On March 14, 2022, the former CEO, Marcus Braun, and 2 ex-managers were charged with fraud and false accounting. Their trial is expected to start this coming fall. So what exactly was the fraud? Now, I need to emphasize again that this is all alleged. I'm sure we're going to find out more when this goes to trial. All we know for sure is that 1.9 billion euros that Wirecard previously reported did not actually exist. Here's what I think happened based on the information we do know. Wirecard set up multiple bank accounts in the Philippines with a number of shell companies that were not real companies. They transferred money back and forth between these bank accounts. Every time they transferred money, they reported revenue. The money never existed in the first place. Now you might ask, if there was no money, how could they steal any money? Because what these executives did was write financial statements that said they had all this money that did not exist. They then took those financial statements to the bank and said, look at how successful we are. We have all of this money. Oh, and by the way, you can trust us because our accounting firm signed off that our financial statements are correct. The bank then loaned them almost $4 billion. That is how they stole the money. When the truth was revealed, the company collapsed, and it is unclear if any creditors are going to get their money back. However, the fraud was not even the worst part. The worst part was the cover-up and coordination between Wirecard, their auditor, Ernst Young, and the government regulator, BaFin. It is important to understand the timeline. The Financial Times came out with their first article on January 30th, 2019. Wirecard went bankrupt on June 25th, 2020, a year and a half later. During that time, Wirecard and BaFin aggressively fought to silence anyone who was exposing the truth. One thing to keep in mind is that first article from the Financial Times was very thorough and well written. They had first-hand testimony from a whistleblower. They had the evidence of a presentation reviewed by the CEO, Marcus Braun, that detailed the fraud. This was not a vague smear campaign against the company. They provided a detailed case for fraud. For BaFin to read that article and respond by threatening to throw the Financial Times reporters in jail rather than investigate the claims is unbelievable, especially when everything in that article turned out to be correct. It certainly looks like the German regulators are more interested in keeping corrupt, rich people in power rather than ensuring that justice is done. The other failure is with the audit firm Ernst Young. Ernst Young had been auditing Wirecard for many years. What is disturbing is that Ernst Young signed off on the 2018 financial statements in April 2019, after the Financial Times article was released in January 2019. The audit letter attached to the 2018 financial statements said this: "The accompanying consolidated financial statements give a true and fair view of the assets, liabilities, and financial position of the group as at 31 December 2018. Ernst Young not only had the Financial Times article that contradicted this opinion, Ernst Young had previously conducted their own investigation in 2016 following the allegations at that time. The 2016 investigation resulted in raising a number of red flags. At the time, Wirecard requested that Ernst Young stop the investigation. Ernst Young threatened not to sign the 2016 financial report unless the investigation was allowed to continue. For some unexplained reason, the investigation was stopped, the 2016 financial statements were signed, and nothing else was said about it. So fast forward to 2019, when Ernst Young signed the 2018 report. They had 4 months between when the Financial Times article came out and when they signed the report. They had 4 months to look into the allegations and look at their notes from their own investigation. Wirecard was a client with a history of allegations. It is unbelievable that Ernst Young would sign off on the financial statements without some sort of asterisk telling investors that there were ongoing issues. To be fair, the former CEO of Wirecard, BaFin, and Ernst Young all claim that they are completely innocent. They claim that they are the victims here. They claim the situation was the result of a few executives at Wirecard who are now missing or dead. They claim that those executives fooled everyone. But it is hard to rationalize that explanation. When the Financial Times article came out, and they didn't do anything to address the concerns for a year and a half. Instead, they did the opposite. Wirecard, Ernst Young, and the German government all coordinated their efforts to take deliberate actions to protect their own interests at the expense of the public in one of the biggest fraud cases in history. Now I want to hear from you. What do you think should be the outcome of the upcoming trial? Let me know in the comments down below. Thank you so much for watching. I'm Zach from Wolves in Finance. Let's go out and make some money.